Nobody is paying attention one more time. Nobody's looking at this chart, the Dogecoin chart relative to Ethereum. Now, why do you want to look at that? Because the relative valuation chart to Ethereum brings very nice bottoms and tops in general for crypto. So you don't just want to look at the US dollar chart, right? You don't want to look at Doge in US dollars because you do have a lot of correlation within crypto. When Bitcoin is going up, then Ethereum is going up, then the altcoins are going up. You do want to look at how is relative valuation going. You buy altcoins in order to outperform, right? Otherwise, you can simply just hold Bitcoin and Ethereum. So you do this for outperformance, and very often you want to isolate how well is a particular altcoin doing in the grand scheme of the crypto universe. So are the gains that you currently make with your altcoins due to Bitcoin going up? Or are the gains actually truly derived from, in this example, Dogecoin? Now, there's a more common way than looking at this relative to Ethereum, right? This is Dogecoin relative to Ethereum, and this is flattening out nicely. The more common way is to look at any altcoin relative to Bitcoin. I'm not really a fan though to look at this relative to Bitcoin because of the correlation. So there is more correlation between Ethereum and the altcoins than between Bitcoin and the altcoins. And that's shown in this chart over here. So these are correlation coefficients, right? It measures how much do different assets move in line to one another. When the correlation coefficient is at 1, it means they always move in the same direction at the same time. When it's at -1, it means they always move in opposite directions. When the correlation coefficient is at 0, it means that the two prices are completely independent from one another. So the closer you are to 1, the more they mimic each other in terms of price movements. Now look at this, right? So this looks at the correlation coefficient, in this case the last 180 days, of Bitcoin to different altcoins. And then we've got here Ethereum to different altcoins. When you compare this, for example, for Cardano, the correlation coefficient with Ethereum and the altcoin is higher than with Bitcoin. Or here for BNB, same thing. For XRP, the same. For Litecoin, the same, etc. For Dogecoin as well. So pretty much for any altcoin, you've got a higher correlation coefficient between Ethereum and the altcoin. So it's really the Ethereum price in the end that determines the general crypto market. So that's why I like to look at relative variations relative to ETH. This is Doge relative to ETH. You can see this is not actually losing anymore for quite a while. Since February 2021, Dogecoin has not lost versus Ethereum. There are these pumps, right, whenever some news come out, but there is no real long-term bleeding happening. So what does this mean? This means that Dogecoin is not being sold off by the long-term holders. It sometimes gets these pumps, right? For example, the recent pump here was when Elon Musk changed the logo of Twitter to a Doge logo. This is when we got the pump here. But below a certain threshold, right? Once we go below this line, it seems like the selling pressure dies down to a certain degree. So how much is this downward potential risk here? It's currently an underperformance versus Ethereum of 11% roughly. What's the upside though? Let's say we get another interesting news. Maybe a corporation, maybe Elon Musk pumping this again. The upside would be 30%, maybe 50%, maybe in the best case even 120% almost. And this is what most people don't really look at, right? Most people look at the various meme coins whenever the news are already out, right? When trading volume is very high, when everybody talks about it, when the price is inflated. But that's then when it's the most risky, because then trading volume comes down again, the hype dies down, the price normalizes relative to Ethereum. So it actually makes sense to buy the asset when it's obviously low, but also when the trading volume is low, when not a lot of people talk about it. And vice versa, right? You should be selling whenever the trading volume is elevated. That's when the news are coming out. Now there's another way to look at this. One could look at the Dogecoin dominance. So that's Doge.D. The idea here is how much of the entire crypto industry is currently locked up in Doge. How important is Doge, relatively speaking, to the rest of the market? And this is currently at 0.95. So roughly 1% of the entire crypto industry is now in this meme coin. And this is also quite nice, right? This is also bottoming, downside risk of roughly 10%, upside potential to the max of more than 100%. Now there's also Shiba Inu. What about that? Let's look at this, right? Let's look at Dogecoin relative to Shiba Inu. This tends to be outperforming quite interestingly, right? It's relatively low. We are in an upwards trend. And since this initial hype that happened in October 2021 for Shiba Inu, Dogecoin is actually now, relatively speaking, performing slightly better. So this is not the first time I do a video like this, right? I made a video with a pretty much the same title, nobody is paying attention, and this is when we're at this point here in the chart, right? Compare this to today, that's the same chart, and we then saw subsequently this Elon Musk pump when the Twitter logo had changed. And that's then when the trading volume was up, and that's then when it makes sense to sell. Now again, we are at a very similar situation. You want to be buying when nobody is paying attention. You want to be buying when Dogecoin is, relatively speaking, and you want to be selling whenever the next event happens. You have to be fast, of course, so it makes sense to always monitor the position. It's not just a long-term hold for the fun of it. It's simply just riding those waves, waiting for the next new event to happen. So it does make sense to hold altcoins that at least don't lose against Ethereum over the long term. It's still very risky. It's a meme coin after all, but if your altcoin at least over the years doesn't lose, then you can afford to make bets like this. You can also take the opposite approach, right? You can work with very inflating altcoins and then bet on the relative devaluation. So you can bet on falling prices for altcoins that tend to have a very quickly expanding supply. More information around this is discussed in the premium membership. So if you're interested in that, feel free to check out this video over here. Hope to see you in that video, and thanks for watching this one. Bye bye.